Welcome to Electrified. It's your host, Dylan Loomis. Real quick from yesterday, I realized part of how I was framing Tesla's AI spend for 2024 came off a bit confusing. Just to clear that up quickly, Tesla plans to spend $10 billion this year. They already spent $1 billion in Q1. Then it'll take another $2 billion to get them from 35,000 H100 equivalents to 85,000 by the end of this year, leaving them with an additional $7 billion. Now, of that $7 billion, roughly $2.4 billion would be for inference compute. That's hardware for in-vehicles if Tesla delivers around 2 million vehicles this year, and we'll say hardware for costs around $1,200 per chip. We don't know that number for sure, it's an estimate, but it should be in the ballpark, which would then leave $4.6 billion for actual training capacity, most likely a majority of H100s, which would be enough for 115,000, in addition to Tesla exiting 2024 with 85,000 H100 equivalents. And remember, it can take months to actually get these chips up and running, and then a portion of this will be allocated toward Dojo, we just don't know how much. But the main takeaway here, you know what they say about following the money. Here it is. We got an interesting report from the information. There seems to be a lot of confusion about what's actually going on here, since this is actually a paywalled article, but I happen to pay for the information, so here we have it. Frustrated by falling sales and the pace of layoffs carried out by his lieutenants, Elon is thinning his senior management team and laying off hundreds more employees. In an email late Monday to senior Tesla execs, Elon said Rebecca Tanucci, senior director of Supercharging, and Daniel Ho, the head of new products, would leave the company as of this morning. At least 500 employees will be laid off, and Elon said we need to be absolutely hardcore about headcount and cost reduction. In the email, Elon said he would dismiss everyone working for both executives, though a few employees would be reassigned. In Tanucci's Supercharger group, roughly 500 people will be laid off. Elon said he was also dissolving the company's public policy team, which formerly reported to Rohan Patel. In the memo, Elon seemed to intend the dissolution of the teams as a strong signal that he's serious about cutting Tesla staff. Starting 10 a.m. today, Elon said he would ask for the resignation of any executive who retains more than 3 people who do not obviously pass the excellent, necessary, and trustworthy test. I've been super clear about this. Elon suggested he would slow the build out of the supercharger network. We will continue to build out some new supercharger locations where critical and finish those currently under construction. Again, hopefully these actions are making it clear we need to be absolutely hardcore about headcount and cost reduction. While some on exec staff are taking this seriously, most are not yet doing so. So yes, could a portion of this move by Elon be to send a message to the rest of the senior executives who are not laying off people fast enough? Absolutely, but I think there's definitely more going on here. And just now, Elon said Tesla still plans to grow the supercharger network, just at a slower pace for new locations and more focus on 100% uptime and expansion of existing locations. Clearly in cost-cutting mode, this makes a ton of sense. Just use the existing sites more efficiently. Where I live, there are 2 superchargers. Every time I show up at either one, there's usually only 1 or 2 cars there max, plenty of stalls not in use. Again though, I do think this move underscores the overall slowdown in EV sales, largely in part thanks to legacy OEMs pulling back and focusing on hybrids. Despite Elon chiming in, there are still questions that remain. There are already some discussions about rehiring some of those impacted in order to operate the existing network and to grow it at that slower rate. The job cuts have left executives at Rivian confused and concerned. That's because these job eliminations mean Rivian, Ford, and others have lost their main points of contact in Tesla's charging unit shortly before the kickoff of the busy summer driving season. Tanucci was one of the main executives building and managing outside partnerships and was thought of highly. We just don't know what the KPIs have been for this supercharger team. We do know that the V4 rollout has been pretty slow, especially in North America. We still have no V4 cabinets anywhere, so it's really just the new dispensers. We do not yet have updated supercharger performance. It's also true publicly, we really have not heard much about the Tesla Semi Megacharger rollout. Now yes, this entire Semi program has been delayed to some degree, but megachargers, even on select routes, will have to precede any volume Semi deployments. And for whatever it may be worth, I am hearing that the Tesla Supercharger team has been one of the most bloated at Tesla. It's been one of the least efficient, and many of the roles on this team outside of some of the program managers have been some of the easier jobs at Tesla. Earlier today, it was reported that Elon had unfollowed Holmars and Sawyer. Elon was asked why unfollow Sawyer, to which Elon said, "Don't post leaks of confidential information and expect me to follow." And Sawyer thinks it's because of the article that he posted from the information. At this point, if you're thinking, wait a minute, what if this article is wrong and they're pulling a Reuters here? Well, we have Will Jamieson on X saying confirmed, Tesla and Elon has let our entire charging organization go. What this means for the charging network, NACS, and all of the exciting work we were doing across the industry, I don't yet know. What a wild ride it has been. In the comments, he said the switch to NACS is not dead, thankfully, since J3400 has already taken up the torch, but further improvements to standards and engagements across the industry will suffer. Tracking down William's LinkedIn page, he was the strategic charging programs lead at Tesla. Just for more confirmation, William actually quote posted on LinkedIn George Behadu, and George was the senior manager of site acquisition and business development for commercial charging. As you can see here, George confirmed he was also just let go. And taking a look at Rebecca Tanucci's LinkedIn page, since her group of around 500 employees is being laid off, here's what she was in charge of: managing Tesla's global charging related business units, including our supercharging and destination charging businesses, as well as our charging equipment sales units. They scaled the charging business, welcomed non-Tesla vehicles, improved network financials, decreased wait times, and launched multiple new products and features. You may remember Rebecca Tanucci from Tesla's AI Day last year. She gave the presentation on Tesla's charging, and I think many of us would agree she was awesome. I've also seen many people out there saying that Tesla's charging has been a cash cow and some giant margin business, but looking at Tesla's financials, that's not the case. It's true, Tesla's supercharging business is unfortunately buried in this services and other business line. This also includes business lines like Tesla Insurance, body repair, part sales, and then one of the highest margin parts of this business line has been Tesla's used vehicle business. Now it's true, those margins have come down over the past few quarters, but all of these are blended together for the services gross margin. And it was only a few quarters ago that we were told Tesla's supercharger business was a small part of this overall line item. The services gross margin flipped positive for the first time in Q2 of 2022 and has maintained profitability since then, but it's actually peaked at a gross margin of 7.7%. Again, we don't have specifics, but there are people out there claiming that Tesla's supercharger network is making billions of dollars per year, but looking at the financials, that's just not the case. An obvious one, we've had Tesla executives over the past year or so talk about Tesla already working on wireless charging, and when it comes to robotaxis, clearly superchargers are not going to be as attractive. I have to say, given our perspective, it does seem like Elon is forecasting slower EV sales growth at least for the next year or so. And yes, legacy OEMs EVs will have access to the Tesla supercharger network over the next 6 to 12 months, but let's keep in mind those companies are not selling that many EVs. At this point, it does seem like there's a fundamental problem with EV sales globally, not just in the United States, but in China and Europe as well. And I know many people are going to draw the comparison, well, Elon laid off 80% of Twitter's workforce and X is still functioning fine. However, I don't think that's a great comparison because Tesla is actually making physical products. And getting lost in the shuffle is Daniel Ho also getting let go. He's been at Tesla over a decade and most recently as the director of vehicle programs and new product introduction. Now, how Tesla plans to continually grow the supercharger network with most of the charging organization currently laid off, and there's only 3 jobs in total listed on Tesla's career site for the United States, that also remains to be seen. Now, even before Elon decided to chime in on this topic, I was going to conclude this segment by saying I have a feeling that 6 to 12 months from now, this decision by Elon will be largely forgotten, excluding of course those that were laid off, but for everybody else, Tesla just has all of the data on the supercharger use, on the EV growth rates, on sales rates, so At the end of the day, Elon always has a plan, and if history's our guide, Elon knows what he's doing even if it's not on our timelines or how we would draw it up. In the subtrunk of my Tesla, I have two new secret weapons. Two new high-power multi-function vacuums from Fantic. Fantic sponsors the channel, and they've been a crowd favorite with the X8 tire inflator, and I got my family on board and loving it. They just came out with the Slim V8 Apex and the Slim V9 Mix. I'm gonna keep one of these in my office because both of these bad boys can blow, inflate, and pump, not just vacuum. So getting dust and debris off my keyboard and my desk to easily vacuum later is nice. I admittedly vacuum our Tesla too often, so I had to grab some wet grass to demonstrate the Slim V9 Mix. It has two power settings and an LED display and a battery indicator. The brushless motor gives it more than sufficient power and can last around 40 minutes. These both recharge via USB-C, so you can charge them both up right in your Tesla. There are a bunch of different attachments for different functions, and they all fit nicely into these travel cinch bags. Here's the V8 Apex, which has this extendable crevice tool, which is nice for hard to reach areas. And then here's the V9 Mix, blowing my clean socks across our table on the low setting. It's really easy to empty the canister and to change and clean the filter if you need to. So if you want to support the channel and end up with a handy product to have around, you can get over 20% off these vacuums using my links in the description below. The big spring release that we touched on last week has begun rolling out to customer vehicles. It's going to be 2024.14.3. Tesla just released a 22-page off-roading guide for Cybertruck owners. So to everybody who thought the Cybertruck was just going to be a road vehicle and only Rivian was built for off-roading, I think you need to think again. I'm not going to read through all of this right now, but here is the table of contents for the guide, and if you're interested, I'll have the document linked below. On Weibo, the CEO of Xpeng said, "I especially welcome Tesla FSD to enter China. Tesla has very good self-driving tech and brand. Moreover, China is now vigorously promoting the opening up of new quality productivity." I already shared this one in the pinned comment of yesterday's video, so be sure to check those in the future. But Neoen is planning to nearly triple its Collie battery, making it the biggest in the country, and this next phase of expansion will be built with Tesla Megapack batteries. Neoen's Collie battery will be 2,240 megawatt hours or 2.2 gigawatt hours and will be the biggest in Australia. That's 560 Tesla Megapacks at $2 million each. That's $1.1 billion. And just rough math, if you put that 25% Tesla Energy gross margin on this deal of $1.1 billion, that's about $275 million in profit from just this project. Not bad for just a car company. Neoen says the combined battery will have the ability to charge and discharge 20% of the average demand in Western Australia's main grid. The weekly Tesla insurance number came in at 14,860. Comparing that to the same week in Q1, that number was 12,800. And I don't know how much this is worth at this point, but this was the highest fourth week of a quarter ever. But I frame it like that because quarter over quarter through the first 4 weeks, Tesla China is down 19.8%. And then year over year for the same time frame, Tesla China is down 31.3%. So it was definitely a good week, but we're still behind pace significantly quarter over quarter and year over year. And on that front, but in the United States, from the California New Car Dealers Association, looking at the BEV share by quarter, it really has stagnated just north of 20% for the last few quarters. In Q1 of this year, the BEV share in California was 20.9%. California has been the bellwether for EV adoption, and in Q1, gasoline made up 60% of the market share, BEVs again at 20.9%, hybrids at 13%, and plug-in hybrids at 3.6%. Looking at BEV registrations by brand for the quarter, Tesla is down 7.8% year over year. In Q1 this year, they registered 50,025. That was down from 54,300 last year. But the three best-selling BEVs for the quarter, the Tesla Model Y, the Model 3, and the Model X. When it comes to the top-selling passenger cars, the Model 3 has fallen behind the Camry and the Civic, but remember, Model 3 production has been very low compared to where it's normally at given the changeover after the refresh. If you haven't yet seen this clip from Chuck, here's a quick PSA on the the Autopark feature.
On the curb. Okay, did you see it going towards that car? So it was not avoiding traffic in the scenario of Autopark. It was going straight towards that oncoming car. So that is an interesting find there, that when in the Autopark mode, it kind of isn't in the version 12 mode. It went straight towards that oncoming car where it should have just waited.
According to BZ in Berlin, Tesla wants to strengthen the health protection of employees at Giga Berlin. Looking ahead, we will now focus much more on prevention. We're currently building our own fitness studio where we also have the opportunity to offer very targeted training, like a countermeasure to monotonous physical activities. There are already physiotherapists and occupational therapists who look after employees at work. Yesterday, we said some customers in China may actually begin testing of FSD as soon as today, and we're getting reports of exactly that. I can't vouch for this account, but they're saying some customers from Zhejiang have received FSD. Possibly in the next week or so, we'll get some first impressions from some of these users using the system in China. VW said today its operating profit dropped by 20% in the first quarter as weaker demand for its premium brands drove a drop in sales. Their CFO said, as expected, our first quarter results show a slow start to the year. Porsche also saw its operating profit drop 30% compared to the first quarter of 2023. The unit sold 71,000 vehicles globally in Q1, down 16% from the 85,000 in Q1 last year. Mercedes earnings also dropped 34% in the first quarter, weighed down by model changes and sluggish demand for EVs. They said its car making margin was 9% below its annual target, hit by high costs of model upgrades. They also ran into problems with its strategy to bolster profits with more top-end cars, where sales were down more than 25%. Their CFO said, "We are not content with the results from the first quarter." Mercedes saw orders of all electric models slow, and in February they walked back their EV sales targets, forecasting fully electric and hybrid vehicles will remain around 20% of overall sales for the year. Despite that, Mercedes said it wants to hold and defend pricing at current levels despite the price cuts seen by Tesla. I'm going through this so hopefully you pick up on the theme. We also have Stellantis, whose revenue fell 12% in the first quarter on lower volumes and unfavorable product mix and foreign exchange dynamics. Their CFO said shipments and revenues were affected by the transition to the group's new product portfolio. Stellantis said global EV sales were up 8%, but in North America, plug-in hybrid sales jumped 79% year over year. Their CFO also said their plan for 25 new models or facelifted launches this year, including 18 EVs, will help Stellantis improve its growth and profitability in the second half of the year. NHTSA has issued a final ruling requiring that by 2029, all new light vehicles sold in the US must have forward collision warnings, automatic emergency braking, and pedestrian automatic emergency braking. All cars must be able to stop at speeds up to 62 miles per hour to avoid colliding with the vehicle. It must also detect pedestrians during the day and at night, and it'll require the system to engage the brakes at speeds up to 90 miles per hour when detecting an imminent collision with another vehicle, and at speeds up to 45 miles per hour with a pedestrian. North American graphite miners are lobbying the US government to impose a 25% tariff on 3 graphite products sourced from China. The US government is set to decide in May whether to bring graphite into the list of minerals that attract the Section 301 tariff. To date, graphite has been exempt because China accounts for 70% of the global output of the material. Basically, if these OEMs can get cheaper graphite from China, then they're not really incentivized to make deal with any of the companies mining and manufacturing it in North America. For that reason, the OEMs are saying without a credible supply chain from North America, it's forced to depend on China, and tariffs make them uncompetitive against Chinese automakers. Earlier this year, Tesla supplier Panasonic struck a deal to avoid these potential tariffs altogether. Panasonic signed a graphite supply agreement for its US battery plants with Novonix. Novonix is an Australian company, but they have North American plants, including one in Tennessee. Today, EF Metal announced the Tesla-approved repair shops that have been taken out from these sympathy strikes will once again be allowed to start repairing Tesla cars starting on May 1st. There are still certain restrictions, but for those who have a crash-damaged Tesla, it'll now be be possible to have it repaired. The blockade for service work still applies to cars owned by Tesla, cars with transport damage, and cars covered by factory warranty. Otherwise, service can be performed on Tesla cars. So the roughly 80 or so Tesla-approved repair shops in the region will be able to resume some work as soon as tomorrow. Just in case you were expecting Polestar's earnings today, they have postponed them due to some accounting errors that they need to rectify from previous years. They're expected to slightly positively impact the 2021 net loss and negatively impact the net loss of 2022. Hope everybody here likes roller coasters, as Tesla stock closed the day at $183.28, down 5.55%, while the Nasdaq was down 2.04%. It was another higher volume day for Tesla, trading about 23 million shares above the average volume the past 30 days. Polestar was actually up 13% today, presumably at least in part thanks to that battery charging breakthrough news from yesterday. According to the year-to-date performance dashboard from FinViz, Tesla is no longer the worst performing stock in the S&P 500. It's being outdone to the downside by Intel and by Boeing and a few others. Even after the Tesla stock pullback today, its forward PE for this year still sits at 72. So as I've said, there are plenty of exciting things happening with FSD, but until Tesla can start earning more from an EPS perspective and those estimates start going back up, it's going to be tough for Tesla to sustain any type of rally. And as we've seen with auto and EV sales pretty sluggish in different pockets around the world, that might be a pretty challenging task over the next 2 or 3 quarters. Don't forget, check out Fantic linked below if you like keeping your Tesla or car or office clean as I do. Hope you guys have a wonderful day. Please like the video if you did. You can find me on X linked below, and a huge thank you to all of my Patreon supporters.